Hi, this is Lisa Brown. I went ahead and interviewed a lender to answer a few questions that I hear a lot from people, and I wanted to share that interview with you. What are the biggest mistakes that buyers make when preparing to buy a house? This gentleman's name is Bert Swires. He's with Insight Loans, and I will leave the information in the comments below as to how to get a hold of him. Enjoy.
I'd say probably the biggest mistake that buyers make is number one, I would say, is putting an offer on a home without a pre-approval. The mortgage market is, it's a little more complicated sometimes than what your average client thinks, and sometimes they'll just think, oh, my credit's great, I make a good living, I'm just going to go ahead and put in an offer without getting pre-approved. Obviously, that can be a big mistake because there's earnest money that might not be refunded in multiple people's lives that could be affected if, say, the home was not to close, sellers, real estate agents, etc. To kind of add a little part B to that, I would say the second biggest mistake clients make is having their money in cash. Due to the Patriot Act and laws and regulations, all the money has to be what we call sourced in seasons, which means that that money has to be proven where it's come from. So you'll need to provide bank statements, investment and account statements, 401k statements to prove where those funds have came from.
Thanks, Bert. The next question that I have for you is it possible for people who owe money to the IRS to still be able to get a home loan?
There are a lot of instances where you can. A couple examples. One, do you owe money to the IRS but you're on a payment plan and you've made payments as agreed and you're good with the IRS, providing the documentation of that payment agreement and that you've made at least 3 payments on that plan, you can buy a house. And in some instances with Insight Loans, we're one of the only lenders in the United States that actually does not need full tax transcripts on each loan. So what a tax transcript means is your lender's going to get a record of your filing from the IRS, and obviously that record will show if you owe the IRS money. In some instances, if you have a normal job, W-2, non-commission, non-bonus, or an extreme amount of bonus commensurate to your overall income, sometimes the lender won't even know you owe taxes. The idea is if you don't need the transcripts and it's not on your credit report and there's no kind of tax liens on your home, there have many instances where you can close a loan and not even have to kind of go down that road of, what do I owe the IRS? We here at Insight Loans have closed quite a few loans where clients have owed taxes and it has never come up.
Wow, well that's some really good information. Sometimes a lot of people think that if they have an IRS debt that it's impossible for them to even be able to get a loan. So that's good news. Thank you for sharing that with us. My last question to you before I let you go today is what sets your company, Insight Loans, apart from other companies?
Well, I'll give a couple different examples. For me personally, I have over 10 years experience as a licensed mortgage broker. I also am a licensed financial advisor, hold a Series 7 and 66 license. What that allows me to do is take a more holistic consultation type approach to my clients instead of more transaction order taking approach, which means we're going to talk a little bit more about how your mortgage is going to affect your overall life, your time horizon when you plan to retire, how that's going to affect your taxes. So that's kind of the value that I add. My company, Insight Loans, the value that we add is we can do FHA loans all the way down to a 580 credit score. We do not charge any junk fees or origination on any loan, so it doesn't matter if you're a 581 or a 801. You're not going to pay any junk lender fees or origination fees. Kind of allude back to the other question as far as with the IRS is we're one of the only lenders in the country that does not require full transcripts from the IRS on every loan. So, if you have a job over 5 years, your normal W-2, you're not in commission, more than 50% of your income isn't bonus, then we're not going to require those transcripts. So if you have some issues with the IRS, chances are they're not going to really get looked at throughout the process. We close most of our loans in 30 days or less, and we also pre-approve instead of pre-qualify. And what that means is a lot of times you can call a lender, they'll pull your credit, ask you a few questions, and just shoot you a pre-approval real quick. I actually will request to look at your pay stubs, verify that you have the money for down payment, look at your bank statement, make sure there isn't anything on there, on your pay stubs, W-2, tax records, bank statements, whatever we may look at to make sure there's not going to be an issue that's going to come up down the road. Because the worst thing that you want to have happen is get a pre-approval, go out and put a contract on a home, and then you're 10 days away from closing and you find out you can't get approved for a loan that would have been something that I would have caught on the front end, and we could have worked a way to try to remedy it to get you pre-approved, or wait the time or do whatever we needed to do to make sure that we're not entering in that contract without the full confidence that we can close this loan.
Wow, thank you so much, Bert. That was an excellent answer to your question. If any of you guys want to get a hold of Bert, we'll put the information down below. and feel free to call and ask him any questions that you might like. I'm Lisa Brown, and we'll see you next time.